Welcome back to Investing Talk Podcast.
Great to be here. Today we're tackling a really interesting one, a stock that's been lighting up trading screens, Eightco Holdings.
That's right. You might know it by its ticker symbol. This company has, completely reinvented itself. It's moved away from its older e-commerce business and jumped headfirst into, enterprise AI authentication and digital identity verification. Super hot sector right now.
Definitely. So the core question we're digging into today is simple. Is now a good time to buy Eightco Holdings?
Exactly. Does all the buzz around this big strategic shift actually line up with the financial facts on the ground?
We've gone through a whole stack of sources, financials, market analysis, momentum charts, you name it.
Yeah.
Our goal is to give you the clarity you need to figure out if this, frankly, high-stakes situation makes sense for your portfolio.
And before we dive in, just a quick reminder, this conversation is for you. If you find it helpful, give us a like, subscribe. It really helps us out.
Yeah, we love hearing from you. And hey, if there's a specific company you want us to examine next time, drop in the comments below. Let us know.
Okay, let's start with the transformation itself. Because honestly, you can't understand the stock price without understanding this pivot. It wasn't slow. It was like overnight. How big a deal is this move into AI identity?
Oh, it's huge. It's fundamental. They basically swapped their entire business model. One day, selling stuff online, the next, building complex proprietary tech in, probably the most critical area of enterprise tech right now.
AI authentication, digital identity.
Exactly. They're trying to build that digital moat, control the keys to online identity.
Right, a moat. But moats need, proof they hold water. We're not just talking about fancy press release, are we? Is there actual evidence they're gaining traction in this new space? It's pretty competitive.
Yeah, good point. We are seeing some early signs. 3 things stand out. First, they've actually got pilot programs running for their AI digital authentication. So the tech isn't just theoretical. It's out in the wild being tested. Okay, pilots are good. What else?
Second, and this one got a lot of headlines, they secured a massive $250 million WorldCoin reserve allocation.
Wow, okay. That's a big number.
It is, and it signals, immediate relevance in that whole blockchain identity space. Puts them on the map in Web3 pretty quickly.
Hold on, the $250 million WorldCoin thing.
Yeah.
Frankly, it sounds a bit flashy. Is that translating into actual revenue now, or is it more like marketing to pump up the story for investors?
That's exactly the right question. Look, the allocation itself, it's a powerful signal. It shows belief in their system from a major player. But actual revenue from it, that's likely going to be slower, more incremental.
So validation more than immediate cash flow.
Precisely. Validation of the potential. And the third piece of evidence is their investment in mythical games.
Ah, the gaming angle.
Right. They're aiming to embed their human verification and digital ID tech right into the gaming world. That shows they're thinking broader than just standard corporate use cases. High volume potential there. Okay, so the strategic vision is definitely compelling, building this potentially valuable AI engine. But what about the fuel? Let's pivot ourselves now from the strategy to the spreadsheets. This is where things get complicated.
Yeah, the financials really paint a picture of a company mid-sprint, transforming at high speed. On the plus side, revenue is growing.
Okay.
Their trailing 12 months, TTM, revenue hit $43.87 million. That's up from about $39.6 million before. So that suggests demand is there, especially, it seems, in their existing inventory management and packaging areas.
Wait, so the revenue is up, but you mentioned it's still partly from their older businesses, the e-commerce support and packaging.
Yeah.
How much of that growth is the new AI identity stuff the market's so excited about versus the, let's say, less glamorous legacy operations?
And that is the million-dollar question, isn't it? Or maybe the $2.45 billion question, given the market cap. A lot of the current reported growth likely still comes from those stable but lower-margin legacy segments. But the market, it seems to be pricing the stock as if those legacy parts are worth almost nothing going forward, and all the future value comes from the AI pivot. That gap between current reality and future expectation, that leads us straight to the profitability issue.
Which is, not great, is it? Despite revenue going up, Eightco isn't making money. What are the numbers telling us about the cost of this big change?
They're burning cash, plain and simple. But it looks like a deliberate burn. They're sacrificing today's profits for tomorrow's market share.
How bad is it?
Well, the TTM net loss was reported at negative $9.40 million. And the operating margins really show the scale of the investment, or burn, depending on your perspective. EBIT margin is negative 11.8%. And the overall profitability margin is down at negative 24.52%. That's just pouring money into R&D and those pilot programs trying to prove the AI concept works before they even think about optimizing costs.
Okay, so it sounds like a real race against time then. Can this AI pivot start generating serious revenue before the cash burn just torches their balance sheet? Spending like that, you need rock-solid liquidity, right?
Exactly. And liquidity. That's probably the biggest red flag flashing in the data right now. Yes, the market cap is huge, $2.45 billion. And yes, their cash position did tick up slightly from about $434,000 to $696,000.
A small increase.
But, and this is a big but, that increase only happened because they took on $605,000 in new debt.
Ah, so they had to borrow money just to bump up a relatively tiny cash balance.
That's the picture. And the key short-term liquidity measure, the current ratio, it's worryingly low, 0.3.
0.3. Can you translate that for us?
Sure. It means if all their short-term creditors demanded their money back tomorrow, Eightco could only cover 30 cents for every dollar they owe. That's walking a tightrope financially.
Wow.
So yeah, negative net income, relying on debt. It signals real near-term operational risk, even if that spending is theoretically fueling future growth.
Okay, when you have that much risk mixed with such a, let's admit it, exciting story, you often get wild price swings. Let's look at the stock chart.
Wild is an understatement. The volatility here is profound. I mean, look at the 90-day share price return, up 693.55%.
Almost 700% in 3 months.
Exactly. That's what happens when speculative excitement meets some perceived operational progress. The trading range tells the whole story. It went from an all-time low of just 98 cents back in April,
98 cents,
all the way up above $15.96 in September. Recently, it's been settling back a bit, consolidating more around, say, $9.50 to $10.24.
Looking at that chart, up nearly 700%. It's got to be thrilling for traders, and maybe terrifying if you're trying to invest long-term. How much of that move do you think is real progress versus just momentum chasers piling in?
It's definitely a mix. A significant chunk has to be momentum-driven at that speed.
Yeah.
But to be fair, some technical signals are backing up the move, at least for now.
Like what?
Well, back on September 8th, we saw a classic golden cross. That's when the shorter-term 50-day moving average crosses above the longer-term 200-day average. Traders see that as a strong bullish signal for the longer trend.
Okay, a positive technical sign. What about the short-term noise? Is it overheated?
It was. The RSI, the Relative Strength Index, got way up into overbought territory recently. But it has cooled off a bit since then. That's actually constructive. It allows for some consolidation, maybe sets the stage for the next leg up. If the news continues to be good,
Then key levels to watch.
looks like support is trying to build around the $9 mark, and that recent high near $15 is clearly the resistance level to beat.
With gains that huge, the risk metrics must be flashing warning signs too.
Oh, absolutely. The beta on this stock is 2.9.
2.9, so it moves almost 3 times as much as the overall market.
Pretty much. You're going to feel every market wiggle amplified. But the number that really jumps off the page, the valuation. The price-to-book ratio is sitting at an eye-watering 274.7 times.
Whoa, hang on, 274.7 times book. That's incredible. For anyone unfamiliar, that basically means the market values every dollar of Eightco's actual assets, like cash and equipment, at nearly $275. That's not just optimism. That's like pure faith baked into the price, isn't it?
It's way beyond a simple premium. It's the market demanding near-perfect, flawless execution starting, well, yesterday. If they stumble, if they miss expectations, even slightly, on revenue or user adoption, a valuation like that could get crushed very, very quickly.
You can't sustain that kind of valuation without a clear pipeline of good news, right?
Yeah.
What are the key catalysts investors are watching for in the next, say, 3 months?
The absolute biggest one, short term, is the Q3 earnings report. It's expected sometime around October 28th or maybe November 13th. That report is critical.
Why is it so pivotal?
Because it's the first real chance for management to show tangible results from those AI authentication pilots we talked about. Investors need to see proof. Not just pilots, but are they converting to actual usage? Are they generating revenue? What are the adoption rates?
So hard numbers needed. What else is potentially coming down the pipe to keep the story going?
Well, we expect continued buzz around the rollout of new AI and digital identity products. The market is also hoping for news about expansion into other industries, other verticals. And management has definitely been hinting strongly about potential new strategic partnerships, maybe even landing a big Fortune 500 client in Q4.
A Fortune 500 name would be huge validation.
Massive. That would really move the needle.
But given how much retail interest and speculation seems to be driving this, what's the word on the street? What kind of rumors are swirling around Eightco that might be influencing the price?
Oh, the chatter is nonstop. Sentiment obviously went through the roof after the pivot was announced. Lots of speculative money flowed in. Rumors. We're hearing things like possible joint ventures with bigger established AI companies, maybe to help them scale their solutions faster.
Makes sense.
Also, some talk about them potentially joining some kind of tech consortium working on global digital identity standards. That would add a layer of serious credibility. And then there's the juiciest rumor, totally unconfirmed, pure speculation at this point, but whispers about potential M&A interest. Larger tech companies may be looking to acquire Eightco's AI tech before it gets too big and expensive.
Right, the M&A angle, that's always the dream for investors in these kinds of companies. That, plus maybe scaling internationally. You mentioned EMEA and APAC earlier.
Exactly. M&A is the big long-term potential prize. And successfully expanding that enterprise identity solution globally, that's where you could potentially see the kind of exponential growth that might justify that crazy valuation down the road.
Okay, let's try and wrap this all up. We've got this compelling disruption story, right? AI focus, some early traction, huge growth potential, but it's balanced against some pretty scary financials. Aggressive cash burn, very weak short-term liquidity. That 0.3 current ratio really sticks out. So what's the final take, the investment thesis here?
Look, our synthesis lands on a, let's call it, highly bullish rating, but with major warnings attached. Eightco Holdings is a high volatility, high potential bet on a company completely transforming itself in a hot tech sector.
So the trade-off seems crystal clear. You've got this enormous valuation that demands almost perfect growth starting now. And that success absolutely hinges on nonstop, rapid execution, especially with those immediate financial risks, that tight liquidity situation.
Absolutely. This stock isn't for everyone. It's not something you just add for broad diversification. It really seems suitable for two specific types of people right now.
Who are they?
One, aggressive short-term traders who are trying to play the catalysts, like a potential earnings beat in Q3. Two, long-term investors with a very high tolerance for risk, who truly believe in the disruptive potential of the AI identity tech and are willing to stomach potentially massive swings along the way.
Okay, so here's a final thought for you, the listener, to chew on. The company chairman has been out there doing global tours, showcasing the products. It's generated a ton of media buzz, which has helped the stock narrative.
Very visible.
Given how much this stock relies on that excitement and on flawless execution, here's the question you need to ask yourself. Can management keep this positive momentum going through the rest of the year just with talk and showcases until they can actually prove sustained financial improvement? And maybe more importantly, what level of real adoption, actual paying customers, not just pilot programs or partnerships, needs to show up in that upcoming Q3 report for you to feel comfortable holding a stock price at 274 times its book value?
It really does all come down to execution now. The next couple of months are going to be absolutely critical for their story.
Couldn't agree more. We'll definitely be watching closely.